I'm Julia Cordova, and welcome to the Place Your Trades Network. We are the network that focuses on trading daily options using the CME Group event contracts to trade E-mini, S&P, NASDAQ, Dow, Russell 2000, gold, silver, euro, crude oil, natural gas, and copper. So today I have a great show for you. I have got Tony Stonk. Pretty sure that's a pseudonym, but we won't tell anybody. He's from Jarvis-Alerts, and he's going to tell me and us how we can use the unusual options activity, or if we can use it to our best advantage. I'm excited about this because I've always wondered that. Okay, so today's broadcast is brought to you by Tradeovate, which has built a custom app dedicated to trading those CME Group event contracts. That's what we're all using at Place Your Trades. And if you sign up, just put your email address in, you can download a synopsis from this presentation today, so that you'll have written notes in case you don't want to take time to write them down. It's going to be good. And also, my synopsis from Lynn Alden last week is available on that page. I put the link on Twitter if you want to download it. That's excellent. Okay, so I thought I would start off by just sort of giving you a 3-minute update into what the market is doing right now. So this is the dashboard. If I click on the dashboard here, you see the live streams. If I hit play, I would watch myself. Don't want to do that. But you also see a chat here, and you can see that Anne-Marie Trades, who is a really good trader, by the way, posted some potential trades in this chat. You can sort of just check it if you'd like. And the reason, or one of the reasons I think that Anne-Marie and I bought the dip is this. Okay. This is great. So if you are interested in quant stats, but you're like me and you're like, what is that? And why? I don't want to be too complicated about the whole thing, right? But today there was really good odds. If ES opened up, there is a historical probability of a 60.99 probability of it closing above where it opened. Where was the prior close? 41.34. So it gapped up, and then you saw that dip so far this morning, right? Right. I saw it and I bought it. And one of the reasons why I bought it was, first of all, I got to my support, but secondly, because of these odds. So I went ahead and bought the 41.50 yeses. I realized that that's unlikely. But you know what? They were super cheap, and I have now an order in to sell half of them if they double, which is possible. I don't know if it's probable, but and then I'll just ride the rest of the trade. If not, they're cheap, whatever. They were just like $3, so whatever. Okay, that's what I did so far today. Now let's bring on Tony. Hi, Tony.
Hey, how are you?
I'm very well, thank you. Thank you for agreeing to be interviewed by me. I appreciate it.
Thank you for having me on. It's an honor.
Oh gosh. Okay, so one of the reasons I asked you in particular to join me is, first of all, sometimes I feel like I'm like a Twitter talent scout. And I mean, it's great if somebody has a lot of followers and, they can sort of help me, and I can help with it. But like, you don't have a ton of followers, but I found you early, and I feel like you're really, really good. If you guys want to check it out, it's at Jarvis-Alerts. And the reason I was particularly interested in Tony was because, I'm a contrarian, right? I think most people probably know that. I don't know. But I tend to be contrarian by nature. And I will tell you, though, every single time I've posted a contrarian trade that I'm in, and then somebody else, this is every time, by the way, this is like pretty much 100%. Somebody else says, oh, you know what? A bunch of calls or a bunch of puts were just done, and it's exactly in the direction that I think, my trade has gone awry. It's not good. So then I'm like, what in the world? Can I use this? Like, can I counter trade this if this happens? I mean, the point is, though, that we don't necessarily, unusual options activity doesn't necessarily mean that it's going to work out. It can be a hedge against a current position. And so I'm just telling you guys this because I'm like trying to figure out, is this something I can use to either fade it or go with it? And then how am I going to know the difference? And what do I look for? And I don't know anything about that. So I brought on an expert to tell us this information so we can use it together to try and trade with the big guy, right?
Awesome. Yeah, yeah. So yeah, there are many ways to use unusual options activity. There are some popular ways to use it, and then there are some different ways to use that information. And we'll go over a few examples. We'll go over some basics, and I'd like to shed some light on how I personally use it in my own trades, and any recommendations that I can give anybody who's just starting with the unusual options activity. Yeah, I'd like to cover that as well.
Great. Okay. So, prior to us, when we were talking about how to make the best use of everybody's time, I asked you if you had some sort of visual material that we could use. Would Do you think we can share
Yep.
that? Okay.
Yeah, I think we can. I think we're ready. I
Great.
have a small presentation. Well, just a few slides. Basically, I just want to go over basics. So let's just talk about what are the unusual options. What do they really mean? And these are just the high level things that I think most of the FinTwit already knows about. It's quite a popular thing these days. A few years ago, unusual options activity was kind of like a new shiny toy on the market, and people were just trying to make sense of it. But at this point, I see there are lots of great products out there. Some are great, some are okay. They cater to this market. Generally, the high valued options transactions, um, which sweep across like multiple orders and multiple exchanges. They're trying to take out lots of asks and to get filled. Those are generally viewed as unusual. Um, we also call them like the trades that are taken by the big boys. Some people call them whales. these could be these could be based on their research. It could be something that they know it's coming. It could be a FD announcement related. It could be an earnings call related. It could be about mergers and acquisitions. But if we really think, well, actually, there's an interesting quote from a. Have you watched the show called Billions?
Yes, I really like that actor guy because I watched him in Homeland, and then I watched Billions.
Yeah. So there's a character in that show called Dollar Bill, and that's his favorite quote. He says that quite a lot. He says when somebody asks him about a trade that they're going to or an information, and he's asked to, hey, are you sure about this? He never says I'm sure or not. He just says I'm not uncertain, and I find that very funny
I love it. I love it.
because
Yeah, I love it. Whenever anybody says it's definitely going to do this, I'm always like, oh no, oh
yeah.
no.
Yeah. So
Yeah.
if we think a little deeper about what this actually means, it's basically the trades are from the big boys of the Wall Street who either know something or they're expecting something to play out, and they want to capitalize on their research, their knowledge, their efforts in the market because they got a lot more tools than a retail trader has. They have more information. They have faster information to access to the information. uh, so what I want to say here is it's the unusual options activity is not something that's like an algo or a formula that's calculated. It's like you put in you fill in like x, y, and z, and then you get the algo to spit out a certain strike price and expiration date. That's not what it is. It is the real trades done by these big boys in the market, and the qualifiers for unusual option activity are going to look for certain characteristics and signatures of those trades and then present to you as, hey, somebody just did it. Now, the important thing to notice here is this is not a like a prediction. It's not something that the algo thinks will happen. It's it's showing you that somebody did this trade, and this is how much they're willing to bet for that trade. Like that's the dollar amount. So it's somebody else's assessment. In pure terms, it's basically like reading their research, reading their analysis in the ultimate distilled forms or form of, call or a put or a strike or an expiration date. So basically you see one line and it tells you what they're thinking.
Okay. Do you use so this is interesting to me. Do you also do this? I know you do it for stocks. Do you do it for futures as well, like the futures calls and puts? Or
Um, I know some platforms do.
okay.
I don't personally do them
Okay.
because it's a lot of data. The amount of data that is out there for ETFs is SPY calls and puts, like the SPY options, the QQQ options, or
Yeah.
the SPX options. They all move, and now we have this fantastic thing for zero day to expiration that has a huge it has a huge way on moving the prices intraday. I'm not doing that right now, but that's something that I want to go
Okay.
forward.
No, I was just curious because sometimes I do see conflicting information. I'll see from other people, but I hadn't seen that with you. Okay, that's good. All right.
Yeah, so the problem that the most unusual options activity platforms have is overwhelming amount of data. It's pages and pages and pages of data you have to go through, and it's really hard for human eyes and brain to go over,
Oh,
which makes it really really hard to
I agree.
it's
I agree
yeah.
with you. Just so you know, somebody bought a membership to one of the most popular services for this, and they took a screenshot for me because I was trying to learn this, right, and I'm like, like I don't want to go through all that. No, thank you. That's like too much information. Like I can't do it visually. So, but
Yeah,
yeah, okay.
it's not it's something that the machines are good at, not the human eyes, not our brains. We can't consume data at that speed as the machines can do. The also the other problem that I also see with a lot of platforms is the lack of um, slicing and dicing, filtering, aggregating a lot of this information. There are platforms that are constantly updating and try to give you a better aggregated view of things. That's typically what we see with a lot of problems. The problem with the unusual options activity. What I personally pay attention to is, and this is where it gets interesting. I'm usually looking at where there is a higher volume than the OI. Um, so think of it like if in if an option expiration date opens up with a bunch of strikes, and there it hasn't accumulated a lot of OI, it becomes very easy when you see the options uh, trading volume. It becomes easy to gauge where the market participants or these big boys are heading into. If some strike and an expiration date has a huge OI, say an OI is of say 10,000 contracts, and the activity that you see is say only 1,000 contracts are traded at a particular price, a call side option, it's hard to know, are they just trading, they're going to close this end of the day, or did they sell these contracts in the past and now they're trying to close them. um, Usually whenever they are uh, buying these contracts, either calls or puts, they could be buying to open or they could be buying to close. And when the OI is too big, the picture kind of gets muddied up. You can't really say when the odds are in better favor for you when the OI is usually smaller and you see a huge amount of options volume. The other thing that I usually pay attention to is expiration that's not too far. You see options activity for maybe a year out, a year and a half out. Some stocks have expirations up to like in 2 years in future. that's not necessarily going to move the stock right away. As a trader, I want to not participate. Now, I don't want to sit in the trade for too long. I want to be done, get my trade finished as soon as possible. So I'm looking for something that is likely going to move quick. And not every option, not every stock trades with a weekly expiration. So you got to look out for certain things like some stocks that have monthly expirations. When you're looking at 3 to 6 months, you're essentially looking at just 3 or 6 data points. For those stocks, you can go for longer, like 6 to 9 months worth of calls or worth of options activity. Anything. So there is always a repeat activity. So by repeat activity, I mean it's the same call or a put, the same strike price, and the expiration date on the same day. If if I put myself in the shoes of big boys and I have certain news about a company and I want to deploy $1 million into that trade. It's a speculative trade. I expect certain things to happen. Um, I don't want to reveal my cards to everybody. And if I just buy bunch of contracts for the entire money I want to deploy, it's going to move the option pricing quite a lot. So what I do is I split my order. I'm okay to wait for the entire day. So I, instead of doing just whole 100,000 at the same time, I could do like 5 trades for 200,000 or even 10 trades for 100,000. So it doesn't trigger or it doesn't flag as, hey, something's unusual. They're still accumulating,
Yeah. I love that.
but
That's so smart. I'm sure that's what they do. I'm
yeah, yeah,
they're not dumb like I am. I'd just go ahead and I'd be like, this thing's going up. I'm buy. You know, I
yeah.
mean, of course that's what they do. I mean, because their volume is so, and they also, yes, and also if they're doing something a little shady, they don't want anybody to know. You know what I mean? So
They don't want to show their cards to you,
right,
like
right. If they know,
to
if
any,
they
us,
know
to any
something,
of us.
right? If they know something they shouldn't know, you know, if a drug is being released, or, you know, something like that, that no one should know, then they don't want to flag anybody's attention on that.
Yeah. So in that case, what's important is I pay attention to the repeat activity because that's something interesting. Not necessarily is going to be, again, I want to say that like these are the trades that somebody thinks going to play out. Not necessarily it has to play out.
Right,
It's an so things like FDA events or news related events. Those are like those are binary events. Those are like zero or hero trades,
right,
and they could be betting on both sides. We just don't know.
right.
But if they're hitting something hard and they're hitting something again and again, that draws my attention. That's like, hey, something's going on here. I should take a closer look at this. Uh, then the next thing that I look for is, and this is actually the next point is actually a big one. I pay attention to this quite a lot. As I said, they don't want to reveal their cards, so they don't do these trades when there is not a very large activity of options going in the market. So as the market opens, you see like a huge flood of orders. There is a big volume at the beginning of the day. Then the order kind of like goes down and then it picks up again towards the end of the day. These guys, they like to go in big and they like to go at the end of the market, not to get people, not to give people enough time to react because they want to hide their cards. So I'm particularly interested in the options trade that happen either first 10-15 minutes of the trading day or last 15 minutes. And there is a higher probability of those things to work out.
That's so interesting. I love that. Okay.
There was an episode in Billions where the guy Bobby Axelrod, he's talking to somebody about the horse races, and he says the same thing. Like he doesn't look at the race course. He looks at the chart. He looks at the board where there are bets being placed, and then he is looking for somebody who are placing the bets at the end, like towards just the end, because they don't want to give other people a lot of time to capitalize on their research and their work.
I don't know who writes that show, but I think,
It's a brilliant show.
oh, it's brilliant. And they must have subject matter experts help them out a little bit.
Right, right,
I wonder how many retail traders really absorb what's being said sometimes. So,
right.
yeah. Anyway,
The other thing, again, that's unusual is, again, this needs some experience. It needs some time for you to keep looking at the options activity for months to really pick this up. It's something where you see, like things like Tesla or Apple or Nvidia, AMD. These stocks have constant flow of options activity. There could be some name that you are not seeing, and you suddenly see a decent amount of sizing on that. That's unusual, and that's something that you should pay attention to. uh, it's not something you can't really quantify it, or basically qualify that as in an algorithmic or like a programmatic way. This is something that you should you acquire these things by looking at this for a long time. Same goes for the sizing. $1 million worth of calls on Tesla are not the same as $1 million worth of calls on, say, UPST or Palantir. The companies are totally different. Their trading signatures are totally different. So something that's out of the blue, that usually gets my attention.
so something I want to talk about that we didn't talk about at the beginning was your experience so far. You are, and correct me if I'm wrong, you are a developer of sorts, right? You are I don't want to say coder. I don't want to, because I think that's like, doing other people's work, but you have experience in software development. Is that correct?
That's true. So I'm a software architect by my day job. I love technology. I've been in this field for
Yeah.
about 18-20 years now.
Right.
So I love technology. Then I got interested in trading, initially just the stocks, and then and got interested in trading options. So I try to use my
Yeah.
experience with automating things, trying to do like improve the most of the mundane work that I as a trader have to go through. Um, and that was the whole, like, the inspiration and reason to start with Jarvis-Alerts.
Yes. Well, I think, I hope that's why I figured out you were really smart early on, because I thought, a lot of these companies that have the unusual options alert, they post wins by people who, turned, $5 into $200, whatever it is, right? And I'm like, yeah, that's awesome. But if you could do that consistently, you wouldn't even need to have a service. You wouldn't want to tell anybody about it. Like you just like sit there and do it yourself, right? And because they're not representative of returns that people get by subscribing to these services. But because you're a developer, because you're somebody who I believe is somebody who's process oriented, I like the way that there is an art form to this, no doubt, but to the extent possible, you've tried to, I believe Jarvis-Alerts has tried to automate the stuff that basically just go through it for me ahead of time, so that I think I have higher odds of actually picking something that has a probability like that. So anyway,
Yeah.
I just wanted to tell you that. I'm not trying to blow smoke or whatever. I just think that I think it's really great.
No, no, thank you. And it's actually true. See, the reason for me to start this whole thing was, I've used lots of products in the past, and then I came across the same problems that we discussed about. There's too
Yeah.
much information, and I started thinking to myself, like, hey, I'm doing this every night. I'm going over this data, and some of this can just be done by a machine or an algorithm for me. Why don't I just try to fix some of these problems, try to have an aggregated view, a bigger picture,
Right.
and which will which will just make me save my time, and at the same time give me a unified view, and I can screen more stuff.
Yeah, I
And
love
I
it.
don't necessarily have to take every trade that comes up. I just want to go for a higher probability trades. And if I have an aggregated data, I see there are lots of call activity, and then there is also a conflicting activity,
Mhm.
which is again, I think that's the other that's one of the gotchas. So I like to think of it like, say you have a ring, and the bears and the bulls are fighting, and there is a news supposed to be out for a company. um, or this typically plays out during the earnings release calls. There are people betting on both sides. Either their earnings are going to be amazing or their earnings are going to suck. Uh, whether they beat uh, or not, what the market is going to react is, I found that very confusing. It's either a, like, they go for just killing the options premium. So basically, you lose so much on the options decay, the IV goes down, and even if you're in the right trade, it doesn't necessarily mean that you are going to make money on that trade. So when there is so much conflicting information, the the I want the platform to tell me that yes, there is a conflicting information, and it's just better to sit out. Let them tire each other out. Whoever is going to win, nobody knows the future.
Right.
Even these big boys who are betting for and against, they don't really know what's going to happen. They're just betting, they're speculating. Um, let them get out of their ammos, and then whoever wins, you can just pick the trade in that direction. So options, unusual option activity is not necessarily geared for just telling you what you should trade. It's also should tell you what you should avoid, and that's another way I use this information.
I love that. So smart.
Yeah, so that's one of the gotchas. I guess a lot of people should look at these things and try to make an informed decision whether I should jump in, or this is something that just I just wait out. Um, so going back to this whole thing started me experimenting with the options data, trying to go over that. So we came up with a our own secret sauce. Um, it's basically the Jarvis-Alerts algorithm is looking at the special signatures on the options trade, um, whether they are sweeping across multiple exchanges. There are different signatures. Like a lot of other option activity programs you see, they would show you above ask, below ask, above bid, below bid, things like that. We try to hide all of that because, like, I don't really care. Like, let the machine manage what it is. Just do the aggregation and tell me what's worth it or not. And then the philosophy of the everything that we do in the algorithm is basically try to eliminate a lot of things by just processing in the machine itself, and don't report everything to the users.
Okay.
So we have, along with that, we have uh, uh, an inbuilt technical analysis in the algorithm. It's also looking at the recent actions, upgrades, downgrades. It's also looking at the latest dark pool activity, and there are a few more parameters that it's looking at. And algorithmically, it boils down to four categories in the score. So either it's a normal, it's a high, higher, and the highest from algo score.
Perfect.
Yeah. So I can. Okay. So basically, that's the whole thing. We started with this app. It's a. Uh, so when I started trading options, I found people online on Twitter, I on stock tweets, and then we started trading as a group. And a lot of us were using lots of different platforms, and we started with, like, I had Tony Stonk as my Twitter name. We had some people uh, One of them was like his name is Vix Fury. We're all Marvel fans. There is Pepper Potts, then there is Treadpool. We just started with that theme, and that's why the name of the product was Jarvis-Alerts.
Gotcha. Love it.
I have a few examples that I think I wanted to cover.
Yeah.
Just the recent examples. This was so basically on the right hand side, uh, it's a screenshot from a Discord feed, and it's I'm only looking at the higher conviction alerts in the algo, and there's a clear distinction from say 26th of April. After 26th of April, there hasn't been a higher conviction alert for AMD. And then from only on the 2nd of May, I start to see some activity. And it's mostly call side. Like everything that you see here is the screenshot from the higher conviction feed. And I start seeing
Oh wait.
call side activity.
Um, I just have to say my
Yep.
my calls, the yeses I bought doubled. So I already
Oh, nice.
I know, just from
Okay.
following the stats. So I already took profit on half, and I'm just going to let the other half go because what do I care?
Yeah, that's
I just
perfect.
wanted to say that it happened.
That's awesome. That's
Yay!
awesome. See, that's actually that's the good thing about like that's the thing about good traders, right? You don't want to sit in the market for too long.
No,
You
no, I
it's like
don't.
it's like sitting in the middle of the road where the chances that somebody comes and hits you,
Yeah,
you want to take your money and go.
exactly. There's a lot of Fed speakers today. I
Oh
want
yeah,
yeah,
it's a Fed heavy week, I think.
week. Yeah, I just want to get out of there. Thank you,
Yeah,
Anthony.
that's
Oh,
perfect.
okay. Sorry.
That's awesome. Yeah, so I'll actually talk about AMD a little bit because there's something else going on with the AMD that made me interested in this trade. There's another example. I guess there was a Palantir. Again, same thing. I saw a very close expiration date calls on 8th, and then there was an earning reaction, which was just went massive. The next thing, okay, this one is actually quite interesting. If you notice the score, it's not highly scored by the algorithm, but the signature of the trade is actually quite interesting. Somebody bought 19,900 contracts at 5 cents each. They bought it on 8th of May for the expiration of 19th of May. And next day, UPS teachers went ballistics. This is something that I'm looking for. Like I usually don't see a 5 cent trade. It's almost comical. As somebody is putting down literally like 99,500, so almost like 100 grand in a contract that's trading for 5 cents. These are
No,
the things I'm usually looking at.
that's cuckoo. Do you think that person might have had some information? Of course, we could tell, but not the not the powers.
No, you can't. See, that's the thing. You can't say that because it's
I
illegal,
didn't. I'm
right? You
sorry. I
can't
don't.
really.
I'm just asking. I don't know. I'm not in the. I didn't know anything. But it's just like hello. You know what I mean? I mean,
It's I think trading based on, I don't want to call it well, whatever, trading based on insider information is
we don't.
thriving and it's very active.
But wouldn't it be exciting to
And you
trade
see
off
this.
of the people who are doing that? Because then it's
Yeah, and that's the idea for the whole thing. Like
that's
it's like
the whole
finding the needle in the haystack. uh,
right.
it's
Right.
somebody else's efforts, and we're just trying to capitalize on it,
Yeah,
right?
we're just trading the people who are doing the bad thing, not the actual bad thing. I love
Yeah.
it. Yes. Okay.
Yeah, so there's another example of NEM. So I want to go over this is the interesting stuff. Like, how do I actually use this data? Again, this is where things get interesting. It depends on who you are as a trader. um, it's like there are when one thing that a lot of people uh, do when they look at the unusual options activity is they try to pick the they try to pick the contracts that they see on the platform. So if you see, so for that example, uh, for UPST, it's a 5 cent contract. It's not going to hurt you to buy or lose 5 cent contract if you don't if you don't go like all the way in. It depends on your risk appetite. Whatever you're willing to lose, if you can just take that thing, sometimes it's a hero trade. It just gives you like 10x returns, and then you're good. Um, but again, at the same time, you have to think about uh, what's your trading style, what's your risk appetite. Are you an options buyer? Do you usually buy the options, or you're an option seller, or do you want to just trade the options, the underlying stocks instead of doing the options trade? And the you can do any of this. Uh, all all the information that the unusual options activity is giving you when you look at this from a really high perspective is it's giving you a bias. It's telling you whether the big boys on the Wall Street are thinking this goes up or this goes down, or there is a confusion. So that the three things you can know about. When you see a lot of conflicting information, that tells you, hey, nobody knows what's going on and nobody knows what's going to happen. They're just betting on both sides. Um, I don't want to be personally in between that fight. I would just let them figure it out and then take a trade. I don't have to trade every day. If there is a overwhelmingly bullish or call side activity, I personally, because of my day job, I'm not looking at the screen. I'm not actively managing my trades, so I tend to sell options. So if I see a lot of activity on the call side, I would just pick a strike, and I would sell the puts, and I would just sit it out. I'd let it play out. If it so I'm trying to capitalize on the theta decay, and the market's been really choppy. We haven't done much in the last, I guess, I think few weeks. The ES has been range bound. QQQs are ripping, but the most of the market's just range bound. So it's good. You don't have to go on the edge. So basically, where you don't want to go very near the money, you can go a little out of the money and sell. Obviously, you'll make less money, but you are not tied to the screen. Some people um, don't have the option to be online all the time and manage their trades. This works best for them. Other thing that you can also eliminate by or you can alleviate is the options price goes down as the stock is not doing much. It's just wasting time. It's just shopping around. In that case, if you're trading the underlying stocks, then you don't really have to worry about that because you can have your stops and you can just sit in a trade. So it really depends on how you want to use this. I personally use this data to sell options. For some people, I know they're the users of Jarvis-Alerts. They usually buy, and they're not they're not buying their entire account's worth on every trade that they see. You can go a little and have yourself a room for trading more, because the number one rule is you gotta make sure you survive the next day. um, yeah, so that's where I want to say, like, the the use of this data, it really depends on you. You can, whatever floats your boat, use that. Think of this as a guidance or like a blessing from the big boys in the market. Doesn't necessarily mean it's going to play out the exactly same way. And then try to look for confluence. Try to look for what you're seeing in the chart. Are there are there is the bias in the same side in the unusual options world? And when both things match, then you have a better probability of winning that trade.
Great.
So I think earlier I said I wanted to go over AMD as an example, and let me just quickly share the AMD's chart, and this is what was interesting. Uh, the so I've seen many flavors of how people draw the fibs. I typically go by this rule. So let me just clear everything. Just to begin from the yeah. Um, if if I'm looking at a trend like this, so the AMD based around 5630, it went all the way up to 78, and then it came back down quite a lot and back to 60. This is not a trend. If I go on a higher uh, time frame, to me this direction is a trending direction from 59, 56 to this. And I tend to draw the fibs. I use the fibs to measure what's happening in that time frame. So I would typically draw a fib from this. So zero being the bottom, sorry, one being the bottom and zero at the top. So this tells me uh, I'm trying to measure this move, and the retracement is like how much of a discount the market is giving me, because this is the trend I'm looking at, and then the next direction, that's
Wait, so
from
start at the beginning. What is the white dotted line? Is that an MA or what?
oh this one, oh that's a volume of the
Oh,
that's the
sorry.
average of the volume.
Okay,
That's an
okay,
average
okay.
of the volume.
So that's
Yeah.
not even relevant. So why did you
No, no, no.
pick that? Why did you pick that bottom and not the other bottom, the one before it?
Okay, so there's the reason was, if I take, I'm usually looking at a unanimous or a secular movement. The secular movement on AMD, if you notice these two as the pivots, it came back. It started from here, went up to 79.26, and then it came back crashing down
Yeah.
all the way from 79 to this. And I'm looking at the trades um, where the retracements on the fibs happens between zero point 0.5 and 0.618. If it cuts below those, it's not a trending direction that I'm interested in. So
Okay. Oh, I love that.
I
Okay, perfect.
yeah, so I'm trying to look for the places where I find a defined a trending direction, and a defined trending direction is this, where the retracement happened, and this is where it's coming down to uh, a zero point 0.5 on the fib, and I just have a marker here. Let's go back to the daily, and this is what made me interested in this trade, because I saw the price came back to zero point 0.5, and this was the this was the post earnings day, and then on the next day we started seeing the calls on unusual options activity, and this is a nice confluence. I'm seeing the price jumping from a half point mark on the Fib, and there is blessings from the big boys. They think something's going to happen, it's going to go up. That makes me interested, and so this is a retracement fib. What I usually do is that I would draw uh, a an extension fib. So I just reverse these around.
I feel like I'm going to have you on again to talk about just the fib stuff because this is really useful.
Yeah, I use fibs quite a lot. Most of my the so I'm usually, when I'm looking at the moving averages, I'm also looking at the moving averages that are Fibonacci numbers, and a lot of this is actually baked into Jarvis's inbuilt technical analysis. It's also looking at Fibonacci series. It's also looking at the EMAs on Fibonacci numbers. Um, so to me, the trade is if this is a secular movement on the stock, the retracement has to come back to either 50% or zero point 0.5 or 618. So 0.382 is the 618 on the reverse. And I'm looking at bounces around those trades, around these levels. So to me, to get a trade is going to be a combination of this retracement and the bounce, and if I also get a confluence from the unusual options activity. If both of those match, then I'm trying to go into that trade. And usually, what I've seen is the move from 618 to 886, and I haven't seen a lot of people use the 886 as the level. This range right in here is, there's a high probability of these two levels to work out. Whenever you find a support around 618 on the reverse, the 886 is usually what you get.
Okay, so
And
basically
I'm
a higher low.
Yeah.
Okay. I mean, sorry,
And then after that,
lower high. Yeah, yeah, yeah.
yeah, and after that, you're basically just trying to find the uh, next thing that has a confluence with the fibs and also the options activity, among the other things. Um, and this is my usually good go to trade. I'm looking at this range and I'm trying to trade this range. We
Gotcha.
can
Okay.
actually look at bigger examples. Let me. Uh,
Well, unfortunately, I think we're going to have to cut this a little bit short, but I do want to have you on again to talk about this specifically. I hope you'll agree to that at some
oh
point.
yeah, absolutely.
Awesome.
I'd love that.
All right, cool. Well, thank you so much for joining us today. I really appreciate it, Tony. And you guys, if you want to give him a follow on Twitter, it's at Jarvis-Alerts. He's got some good stuff that comes out sometimes. You can, that's, I think it's very actionable, or at least that you can think about taking. And if you want to follow at Place Your Trades as well, I am Julia Cordova at Cordova Trades. And thank you so much for joining, and we will see you on the interwebs. Okay, bye, everybody.
Thank you so much.